Let us consider an example of how the sale of asset is recorded in machinery account. Now here in this question, it is given that a company purchased a machine for rupees 8 lakh on 1st July 2005. It is to be depreciated at 10% on original cost. Again, original cost signifies straight line method. On 1st April 2006, this machine was sold off for rupees 5,50,000. Now here the asset, this asset signifies the same machine. Now the accounts are closed on 31st December each year. That again signifies the same thing, that is the financial year starts from 1st January and runs till 31st December. So now students, we have purchased machine on 1st July. So on 1st July 2005, it would be to bank account. The posting would be to bank account because the journal entry would have been machinery to bank. So the amount here would be rupees 8 lakhs. Now a careful look at the question will show that in 2005 there is no other recording or the posting to be done. So at the end of this year, that is 31/12/2005, depreciation would be charged. So by depreciation. Now students, just to recall, since this asset was purchased on 1st July and the year of or the date of the closing is 31st December each year. That means during this year this asset was used for 6 months, July till December. So depreciation of 10% would be charged on 8 lakh for 6 months, which turns out to be rupees 40,000. So depreciation for this year is rupees 40,000. Let us find the balance at the end of the year. 8 lakh minus 40,000, so balance is 7,60,000, written as by balance carried down, and the total is rupees 8 lakh. So now students, this closing balance of 7,60,000 would be taken as a brought down balance on 1st January 2006 to balance brought down 7,60,000. It is clearly mentioned that on 1st April 2006, that is in this particular year, after 3 months, that is Jan, February and March, this asset was sold off. Since we have used this machinery for 3 months, depreciation would be charged for 3 months. So on 1st April 2006, by depreciation, 10% of 8 lakh for 3 months. That comes out to rupees 20,000. Now students, since this asset has been sold, it would be recorded as by bank. Why? Because the journal entry would go as bank account to machinery account. So by bank 5,50,000. Again, we'll have to calculate the profit or loss. Remember, this is the working note here. BV means book value in beginning of the year, rupees 7,60,000, minus depreciation for 3 months, 20,000. So book value on date of sale is equal to rupees 7,40,000. So now students, it is very clear that on 1st April 2006, the book value of this asset was 7,40,000 and this asset has been sold for 5,50,000. So it clearly shows that there is a loss of rupees 1,90,000. The difference between these two amounts, that would be recorded as by profit and loss account, 1,90,000. And that should total out the account. Since there is no other machine and the one machine that we had has now been sold off, so the machine account would balance out or would total out and there would be nothing left to be carried down to the next year.